Hi everybody, this is Jazz, aka Trend Trader for you. It's been a while since I did an analysis. Sorry, I've been busy, a lot of things going on, and just didn't get enough time to do my analysis. So let's talk about ES, which is your S&P 500 futures, which is same as SPY. Okay, same chart, same price action, but let's just talk about the futures. Okay. In this video, what I wanted to focus on is not about what the entry is or where the exit is or where the trade setup is. Rather, I want to talk about that have always kind of stressed about it, the trend. Okay, and this video is more likely geared toward long-term investors, traders, or basically giving you a picture for somebody who's new to trading, okay, has no idea about technical analysis, yet you can just pull up a chart and by simple line tool, you can tell, okay, what's about to happen. Is the trend following the line? Okay, ascending line, descending line, diagonal line, whatever you want to call it, right? So let's just go in there. Okay, get my tool out, get the line tool. If you look, sorry about the noises in the back, kids playing, got some relatives over. So beautiful uptrend, right? Talked about in all the videos. All you gotta do is draw a single line, okay? Pass it through as many candles you can, okay? Intersect it through many candles you can. And if it breaks, okay, if it breaks is the time you want to be careful. So this is where the candle is obviously, or your blue line is obviously broken, right? Your price action or your prices per week, monthly, daily is not intersecting this line. Instead, you can draw the line to the downside now, okay? It's huge, okay? I'm gonna say it again, that all you need is a simple line for all you long-term investors, or more likely gearing also toward 401k holders, okay, mutual fund and all that, okay? You are the one who is going to protect yourself. These companies, financial institutions, they don't really give a crap, okay, to be honest. They don't really give a crap because they're getting the commissions. If they're making you money here, they're taking the commission. If they're making their money here, they are getting the commission, okay? If they're making money, if you or they are making money here, they're definitely getting the commission. At the same time, they are also making money off of you, okay, which is good, right? But now they're making money right around here too, okay? But you're not, okay? They're gonna make their commission right over here, you're not. So what I'm trying to say is control your own 401ks. Punch in, right? Punch in the symbol, okay? I'll just show you one, VGE NX. It's a Vanguard Energy Fund, okay? And this is something that's in part of my 401k. It's been down, the energy's obviously been down. But what I'm trying to say is, follow the trend, draw a simple line. If the line breaks, okay, if there was a line in here, if I were to draw a line right around here, if this line was broken around this area, they're making money, but you're not. You're done making money. So make that decision. They're not gonna tell you. Your employer is going to keep allocating that money wherever you told them to, okay? But it's your job to go in there and start changing your allocations, okay? Right now the bonds are probably doing better, so start taking, or you should have started taking the money out of your the funds that were going up. Now obviously they're going down because the whole market is going down, okay? So you should have already done that and start putting money into the bonds, okay? So this is not a lesson about the entry, the trade setup, but it's more about learning the definition of a trend, okay? Zoom in a little bit. What we seen here is a beautiful move to the downside. The shorts are making money, okay? They are the ones that have started making money, and they're gonna continue to make money. The trend has changed, and there is no hindsight, okay? When I talk to my videos, I try to provide, okay, watch below here, above here, below here, above here, okay? And I talked about watch below this area, okay? Around, I don't exactly know where was the line at, but I know that this was the area where I said watch it to break below. Once it breaks below, you got to do something about it, okay? From 2032 we went down to 1835. That's a 200 points, guys. That's a 200 points, difference that somebody could have, if you were doing your own analysis. You don't have to listen to mine. You can, get any analysis. If it makes sense to you, follow that. Okay, there's, thousands of, services out there. Just pick one, just follow it. Okay, if they're accurate 70-80% time, good. Just keep on following them. But if they are just out there just to take your money, you gotta find somebody better, okay? Or if they're wrong, like if they claim that they're right 100% time, nobody's right 100% time, okay? That's just it doesn't happen in trading, okay? You gotta lose some, you gotta win some, but you gotta have your percentage higher when you're winning, okay? So anyway, so this is where the trend was broken, and continue to go down. Draw the line. The line now is to the downside, and if you want to start looking for patterns, you can start looking for patterns. You had a little bit of a, kind of like a, let's see if that makes sense in here. You had a little bit of a, let's do, okay, to the downside, went up. You could possibly come to test this area, okay? Somewhat of a, you can say, I mean, if you have to squint, it's not really a pattern, but your left shoulder, the head, you could have the right shoulder right around here, and boom, to the move to the downside, right? So basically this is the head and shoulder pattern, if you want to say it, but it's not more about the pattern. It's about what you see in the price as you're watching it day by day, candle by candle, week by week, or monthly by monthly, okay? The move is to the downside. If the price does go up from here, this is a critical area. That area right there is this area, which is around 203, 204 on the SPY. To watch, this is where the major resistance is. You got to understand, you have to understand how the psychology works behind the markets, okay? All these people, right? Basically, above 1931, if anybody is holding it, they're all losers, right? They're literally not making money. They're waiting for the price to come up so they can either break even or maybe make a buck or two, okay? Here, this is an area, critical resistance is around here. Think about it, right? All these, you see, if we were to draw a single line here through rising from 2051, all these people who bought it, right, around this area, the price goes up, they're gonna wanna take their money out. They're like, let me just break even. What's gonna happen at that point, okay? Smart people are actually going to short. Price comes up on a reversal. I'm in a weekly chart. You go down to daily, you go down into the smaller time frame. So now I'm kind of going over with the trade setup. I should make this shorter, but that's fine. If the price comes around this area, okay, these are the people who could be still holding it. They didn't take their losses, right? They're like, you know what? It's finally at a point where I can take my money out and be break even, okay? What's gonna happen then? If they're breaking even, right? They're selling it to somebody, okay? So the sentiment is actually bearish, okay? Because price goes up, these people want their money out. They're like, I'm breaking even. So they want their money out. Makes the sentiment bearish, right? And the smart people are actually going to short it, okay? so makes the sentiment more bearish. Okay, there's always a buyer to seller. It's never the case where there are more sellers and more buyers. Okay, you want to sell your home, like I gave examples before. You want to in my earlier videos, that if you want to sell your home, you have to, somebody has to buy that home. Okay, it's not just going to disappear. Same thing with stocks or instrument or whatever you're trading. If you want to sell it in here, somebody has to buy it. Somebody, I don't know, maybe it could be somebody who don't know what they're doing with trading. Okay, but again, you got to see the reversal. Once you see the reversal, this is an area where I think the reversal might come to the downside. Okay, again, it might not happen, but okay, we'll let the candlestick decide. You could have a hammer, you know, and trend could just keep on going, never give a reversal. Okay, or you could have the price go up, give some kind of shooting star. Okay, bearish engulfing, bearish harami, blah blah blah, all those candlesticks. Watch for that. Watch for that around this area to see the move to the downside. So now that you know what the trend is, okay, the trend ceases to exist. It's done. This trend is done to the upside. It has started to the downside. But what do you do if you want to short? Let the price come in the right area before you go short. Or if you want to go long, that's fine too. Because when you do go long, you know your risk, right? I can go long right above this area, 1996. I can go long with my stop underneath it, because I could very well be wrong. Okay, I could very well be wrong if I'm saying, oh well, we're going to the downside here. That's why I say, you know what, I don't know how people predict where the price is going. I just rather predict the move that I'm in instant. Okay, that I am going to have a setup and I'm going to obey my stop, and if it works out, good. If it doesn't work out, hey, you know what, let the price tell me that it's not going to work out. But this is the resistance area. If you want to go long, right above this area is your long with a stop possibly under here. It's a long stop, but you can trade SPY, you don't have to trade ES, and your profit potential could be right in this resistance area. And if you don't see a reversal, you know, keep trading to the upside. Okay, keep trading to the upside. But that's the way I look at it. When you have a trend and your higher highs and higher lows are being made, okay, that's a definition of an uptrend. Keep it simple. Okay, keep it simple, stupid, right? And when you're making lower highs and lower lows, right, you obviously have a lower low once it broke this. That's why I said in my past video or a couple videos before that, watch for this area to break. If it breaks, you can see possible move to the downside. Okay, and this was somewhat of a support, which actually did bounce very nicely. If you go into daily, this hammer, you know, price came in here, support or demand, and just had a little nicer move to the upside in this week, and still could be a possible trade to the upside. So that's it as far as that. And just know your support and resistance, your trends, okay, and your candlesticks, and then you can apply market profile, indicators, Fibonacci, whatever you want to do. That's totally fine. But don't forget that you gotta follow the trend. If the trend is to the upside, keep trading that. If the trend has reversed, then start to change that. Okay, start to adapt that. Okay, and admit that, you know what, trend has changed and I need to do something about it. Okay, if you don't do something about it, and you will keep on riding against the ebb and flow, okay, you're gonna have a strong wave going in. When it comes out, you want to ride it when it goes back out again, rather than finding the current. You know, don't just ride with the wave. Okay, get that swing in, get off of the wave. Okay, wait for the next wave to go either up or down. Okay, so go with the ebb and flow. Don't fight the market, don't fight the trend. And it's us, the traders, that are always wrong. Market is always right. Okay, so anyways, guys, so I'll try to do more of these, and if they help, good. If they don't, you know, still good. You know, I don't owe anybody, I don't get paid anybody for doing these, but it is. Take the benefit of it or not, and hope you enjoy them. And I'll try to put them out more down the road. Take care and have a great weekend.